Tech stocks have returned over 20% since the start of the year, but short sellers are betting that the tech rally could come to a screeching halt. The million-dollar question is, are we in a tech bubble, or is there room to grow? Here to explain why he's bullish on the tech sector is Vitali from TD Asset Management. Thanks for being here.
Nice to be here.
So I'm going to start off with earnings season. We just went through it with the tech sector, and expectations were pretty high going in. So looking at some of the big names, how did they do?
Well, I think the short sellers are going to be disappointed with this quarter. Tech had another very strong set of results, much like we saw in Q1. To give you some numbers, Q2 17, sales were up 8% year over year, earnings were up 15%. And excluding the volatile energy sector, those were the best results across the S&P 500. Now, how did tech do relative to expectations? The answer again is very well. If you look at sales, technology companies beat expectations 70% of the time. When we look at earnings, the picture is even more emphatic. 85% of the time, technology companies came ahead of the expectations set by the market. So as we're exiting the quarter, this is a pretty good time to sit back and kind of evaluate where we are in valuations. And despite the big run in the stocks that we had this year, valuations are still very reasonable. Technology companies trade at around 18 times forward earnings multiples, and that's actually a smaller premium that we've seen historically to the broader market.
Now, you mentioned valuations, and with short sellers betting that there's going to be a drop, how has tech performed relative to the rest of the market?
Tech's been very strong this year. It's up 23% year to date, and that's definitely better than the broader market. And actually, this is a trend that's been playing out year after year. Tech has very strong earnings growth, and then the share prices do very well as well. And so what you see over the course of 5 to 10 years is that technology companies are gaining a greater and greater market share as a portion of the whole market. If we look back to 2006, 2007, technology was roughly 15% or so by market cap of the S&P 500. Today, that's up to 24%. And that's being driven by some of the names that we all know and love. For example, Apple, who sort of reinvented mobile communications with the smartphone in 2007, and the internet names like Alphabet and Facebook.
If we move away from some of the company-specific dynamics and we look at the broad trends that are emerging in tech, what do you think is driving the industry?
There's a couple of trends that we should talk about. The first one is something very important that's happening today, and the second one is something we see further out on the horizon. So first and foremost, solid economic growth. Technology companies are telling us that, look, the global economy is very strong and we're benefiting a lot from it. And technology companies have a very good feel for these sort of things. So when you think about a company like Visa or Accenture, they're doing either payments processing or consulting and outsourcing for other enterprises. So as soon as the economy begins to turn, they know about it. And fundamentally, they're saying things are very, very solid this year. The second trend is artificial intelligence. Now, artificial intelligence is still in its very nascent early days, but what we're hearing is that the big technology companies, the Apples, the Googles, the Facebooks of the world, are making this their #1 IT priority. They're trying to figure out how this technology will give them a competitive edge in the future, and we think that's very important. So while investors shouldn't expect that this is going to impact the bottom line this year or even the next one, they should begin to think which companies are positioned to gain a competitive advantage from artificial intelligence in the next few years.
One of the things I asked you about was, how you would play the space overall, or what's your outlook? And really, what do you think about comments of a frothy market out there? But you actually said you're bullish and that it comes down to profitability. So you liking specifically the new tech names. What do you mean by that?
Well, first, the comment you made about frothy, I think it's important to address that. There is a narrative out there, and I think it's an uninformed narrative, that there is a bit of a tech bubble. Now, we don't think so, and one way to prove that would be to look at valuations today relative to when we had an actual tech bubble, and that's in March of 2000. If we look at valuations, forward earnings valuations, we'll find that technology names in the S&P 500 were trading north of 50 times multiples back 17 years ago. Those are absurd valuations. Today, as I mentioned earlier, we're trading at about 18 times forward earnings, very reasonable levels. And it's also important to note that back in 2000, we had a lot of euphoria about potential profitability, potential sales. These companies were unproven. Today, these are very real profits, these are very strong fundamentals, and these companies are very, very solid overall. And specifically to new tech, what I meant there is that there are many emerging industries within tech that we can now invest in that simply wasn't possible 15, 20 years ago. The ubiquitous one is, of course, the internet. Sometimes we forget the World Wide Web has only been around for about 25 years, and only half of the world's population is actually online. of those that are actually online, well, many of them don't enjoy the same connection speeds, for example, that we might enjoy here, and so they simply can't use the internet to the same extent that we can. And so companies like Alphabet, Facebook, the ones that actually own all the apps that we use on a daily basis, are set to benefit, not just for the next few years, but over the next decade and potentially even more.
Thank you very much.
Thank you.